Good morning, Steve Free in Chicago with the morning grain comments. Mixed trade overnight. Beans we've got up 6 cents at $13.84 on the September. Oil's down a little bit while meal's up a little bit. September corn's up 5, while July corn's up 9. Wheat's Chicago's down 8. KC's up 4. Minneapolis is up 3. Stocks look a little bit lower. The dollar's lower, and crude's a little bit higher. First of all, I want to apologize for not getting information out yesterday. Unknown to me, I was switched from an employee connection to the network to a contractor. So yesterday was trying to get everything back. Right now I just have prices and emails, so bear with me as I try to get things back to the way they were before they switched everything. As far as the markets are concerned, again, the bean market yesterday saw a little bit of buying because of a drier weather pattern, especially in parts of South Dakota, Minnesota, northern Iowa, maybe southwest Wisconsin, and northwest Illinois. We also noted that the Chinese were asking about U.S. prices for the fall, when November beans sitting at $13.60. Somebody was saying, what price should the Chinese be pricing? And the answer was $13.25. But if the yield drops below 50.5, then you could see November beans possibly trade over $14. The opposite is true in corn. With the increase in acres, we're probably trading a 172, 173 yield, and with lower demand, we're still looking at a carryout over 2 billion bushels for 23-24. The interesting thing, though, is that farmers' marketing plans could be sell beans off the combine and store the corn, which could keep the basis strong, and you still have this record spread between July and Sep and July and Dece, showing how tight conditions are. But export sales tomorrow are expected to be on the low side for beans, corn, and wheat, which offers resistance above the market. Pretty good rally in the wheat yesterday on talk that the Russian early harvest of the winter wheat was below expectations. Again, only 3% of the crops harvested, and certainly conditions can improve. And so the wheat market is strictly looking at Russia right now and just how much wheat they're going to have. USDA says 85 million tons. Some people are down to 82. One person's down to 78. Anything below 80 million tons would certainly be supportive to U.S. wheat futures, despite the fact that we really don't have very much wheat export demand. The other thing I think the markets are going to be watching is U.S. and China relations. It seems like U.S. and China is trying to find some bottom in relations and try to improve, with the Secretary of Treasury following the Secretary of State in visiting China. We'll also be watching the Russian situation, more missiles in Kiev last night, and we'll just kind of figure out where we are as far as the counteroffensive Ukraine against Russian troops. So we're still looking at the corridor deal not to be extended because of what Russia wants as far as drop of sanctions and increased use of the SWIFT program.